I'm going to do, if you guys can hear me, just give me a visual. I use this little thing called a Wacom or a Wacom board. I am dyslexic, so I'm pretty visual. So what I'm looking at here is you should see a warning. All right. So if you see this warning, answer this question really quickly. If you can see, I'm writing on the screen. I'm going, this plus this equals what? Just give me the answer, and it just makes sure that I've got this thing set up correctly. All right, cool. So I'm good to go. All right, I am registered, which means I'm a registered representative. I have a Series 3 and a Series 30, which is a fancy way of saying that I took a couple of tests and got a 70 on it. That's all it means. And a lot of people ask me, like, why am I registered? The reason I am registered is because I wanted the lowest possible commission rates I could potentially get in all of the markets that I trade. Now, I trade more futures than I trade anything, so I hit that market first. But I trade stocks, options, futures, forex, bonds, gold, crude oil. If it moves and I think I can make money on it, I'll trade it. But since I'm registered, I'm held to a higher standard of what I can and cannot say. So you will not hear me say guarantee on anything other than if it's a guarantee if you want to purchase a course or an indicator or some training or something like that from me. As far as guaranteeing you anything, about the only guarantee I can give you is I guarantee you're probably going to lose money trying to figure out how to trade. In order to cover myself, you need to read this entire slide. I'm not going to read every word because I'll mess it up, so just read it as I'm talking through it. This is the gist of it. You should never trade with more money than you can afford to lose. You should only trade with discretionary income. What you're about to embark on is hazardous to your health and your wealth. Heads up, you're probably going to lose all your money while you're trying to trade. Now, I like to go above the call of that disclaimer and make it even worse to try to scare you away from trading. Your trading career will probably end up like a bad country song in reverse. In other words, your wife's going to leave you, probably for your best friend. Your kids are going to grow up spoiled brats and hate you because that's how it just works, right? And then your dog dies because there's no cats in country songs. They then come to repossess either your Chevy or your pickup, your Chevy or Ford pickup truck, and then obviously they're gonna come foreclose on either your single wide or your double wide trailer. So if everybody understands the disclaimer and you understand I'm trying to scare you away from trading, just give me yeses. That way, if the governing bodies that look over my shoulder, the NFA and the CFTC goes, okay, well, he did a good job. He tried to scare him off of it. All right, so yeah, now the kids live at home, right? They don't go away mad. They just stay at home. All right, so my name is Hubert Senters, and I forgot to tell you the one thing. Like, the reason I'm registered is I have seats on the exchange, and I also have my own brokerage firm. So I pay very low commissions. So it enables me to do stuff that other retail traders don't normally do because my costs are so low. All right. My name is Hubert Senters. This is my no BS approach to trading and investing. In the trading and investing niche, I'm kind of known as the guy that kind of is like the no BS guy. Like, I'm a straight shooter. I kind of call them how I see them, good, bad, or indifferent. Now, there are 3 different ways, in my opinion, to generate really good wealth and income in the United States. One of them would be trading and investing. One of them would be to own a business. And one of them would be to own real estate, okay? Now, it doesn't matter which one you do. I do all 3. I recommend that you do a combination too. You know, sometimes this one makes you more money. Sometimes this one makes you more money. Sometimes this one makes you way more money. So it really depends on what you're doing. Those are 3 really good ways to generate some income for you. So now, what do I believe? I grew up in the rural coal mines of eastern Kentucky. I didn't grow up rich. I didn't grow up poor. I grew up in a middle-class family. Both my mother and father were worked for American Standard, and they taught me a really good work ethic. So I work a lot. But I didn't have a whole lot of role models if I wanted to be a millionaire or a multimillionaire. So I had to go out into the world and seek some advice and mentorship from other successful, driven, and wealthy individuals. So now I'm lucky enough or fortunate enough or skilled enough to actually be in masterminds with all these people in these photos and stuff. And this is just a collection. I don't show you this collection to impress you. I show it to impress upon you. If a little fat redneck from Kentucky can be a multimillionaire, you can do it too. But there is one caveat. If you're starting here, and this is your START, your start, and you think you're going to end up here, and let's just make this we'll make this a bag of money, all right? Because this is kind of how everybody thinks about it. And if this is your millions or your multi-millions of dollars, I've never seen anyone go from point one to point two in a straight linear line. Never seen it. I've actually never seen it where it's a stair step either. A lot of people will teach that. I've never seen it happen with any of my multi-millionaire buddies. And then there's a couple of billionaires in our mastermind too. They've never done it that way either. It always starts out either on failure after failure after failure. Then you get some success, and it ends up looking like a spaghetti bowl. Like it's just a mess trying to get to where you're trying to get there. Heads up, when you get here, you better set a new goal because you're going to have to reset and go for a new figure that you're looking for. This is a picture of me and Paula Abdul. She's actually about 6 inches shorter than that because she's got 6-inch heels in this photo. Super nice lady, just a huge heart, and not as flaky as everybody makes her out to be. She's just a real nice lady. This is Sir Richard Branson. He has longer hair than I do. In this photo, I have more chins than he does, which means I'm probably going to die of a massive heart attack before he dies. Both Richard and I suffer from dyslexia. We had a conversation about that. That was an interesting conversation. This is Mr. Wonderful. He's on the hit show, the Shark Tank. Never do business with this guy. He's going to try to do a license deal and gut your company. That's just what he does. And then also, like, if you have to have dinner with him, I know the difference between like a $5 bottle of wine and a $100 bottle of wine. I don't really know the difference between, a $100 to a $900 bottle of wine. I can't taste the difference. Evidently, he can. I can't, though. And then this is Dave Ramsey, and this is at one of his Christmas meetings, Christmas parties. Dave runs Financial Peace and DaveRamsey.com. He helps me with my business, and I help him with his business, teaches guys how to do webinars. This is me. I'm the guy with this big catfish head right here. I don't normally dress up like this. Right now I've got a pair of shorts on because I've worked out this morning, a T-shirt and a pair of tennis shoes. These right here are the machines that I'm in front of right now as I'm talking to you. So these are 6 24-inch LCD screens, and then this microphone is the microphone I'm on. Now, when I was a kid, I used to watch a lot of Ghost of Mr. Chicken and Scooby-Doo. So Ghost of Mr. Chicken. Mr. Chicken. I watched a lot of Scooby-Doo, and I watched a lot of Batman. So I always had the thing like, you ever see the Scooby-Doos or Ghost of Mr. Chicken or Batman when they got those secret doors that lead into the passageways and secret stuff? I always thought that was the coolest thing when I was growing up, and I'm like, man, if I ever make enough money, I'm going to have those secret doorways and passageways installed in my home. And actually, I have 3 of them in this home right now. So my office, we affectionately call it the Bat Cave because I'm a Batman fan, and I've got a secret door into my office. So downstairs in the basement of my home, and I know it sounds like I'm a serial killer, but I'm not. You got to see when I try to hire people to work here, and they're like, oh, that's interesting. There's a bookcase at the bottom in the basement, and you pull the book and press a button, and then it opens up into a room, a series of rooms that's about 1,500 square feet where we all trade and run our businesses. And I have actually another room like that, and then another room in the house. So I know it's immature and childish and stuff, and I don't care. I kind of like it. It's a neat little feature of the house. So now you know a little bit about me. Congratulations, you're in the right place at the right time, and here's why. Before we get started, I don't have a poll set up, but what do you trade the most of right now? Just really quick, just type into the chat box. Do you trade more stocks, options, futures, bonds, forex? What I'm going to teach is going to be useful for all of them, so it doesn't matter so much to me. I'm just trying to see who all is attending. So options, futures, options, stocks, options. So we've got a good mix. We've got more stock options and futures than we do forex. FX, binary options. Okay, all right, cool. Right now, the ZB, because you taught me, that's right, we're making, John, nice moves, right? Yeah, we had a good little, the 30-year didn't get filled, but the 10-year got filled, so we're up on that trade nice. All right, so here's why. Now, before we get started, too, like, really quickly, was easy? Yes, was easy. What's your time frame? So I now know what you trade, but what's your time frame? Are you a day trader? Are you in and out by the end of the day? Are you a swing trader? Are you holding it for more than 8 hours? Are you holding it overnight, in other words? Or are you an investor? Are you holding it longer than 3 months? What's the average time frame here? Day trade, swing trader, or investor? All right, so no investors. That's perfect. All right, so more swing and day than anything. All right, so here's why. All right, so I'm going to show you how to take your trading to the next level. if you use candlesticks, with most of you should use candlesticks. If you don't, you need to use candlesticks. They're a better way to go. I'm going to give you a new opportunity, a new way to take your trading to the next level. All right. Now, what does this work on? This works on stocks, options, futures, forex, bonds, gold, and a lot of other commodities. All right. And at the end of this webinar presentation, I'm going to do a lot of live charts. We're going to go over live chart after live chart after live chart, because PowerPoint is useful up to a point. PowerPoint is useful for teaching you a theory or a concept on a perfect case scenario. Then we're going to go through all of the markets, and then you can give me symbols, and I'll show you where I think they're going, where you should be long or short, and what the stops and what the targets are, okay? So as I'm going through this PowerPoint, don't worry about the PowerPoint slides. Some of them are older. It's to do it to teach you the concept. So this is going to be different, but in a good way. I like to have fun and cut up. Life is too short. If you're not joking around and having fun, what's the point? Because none of us get out alive last time I checked. So we're going to have some fun here. So these are the back-tested results of this strategy or tactic. On the S&P 500, the results of the last 5 years in the stocks in the S&P 500, it has worked successfully on 430 out of 500 stocks, okay, which is 86%. It would have given you a return of 33% if you had taken every single signal. So in other words, when there's a long, you go long. When there's a short, you go short. Long, long, short, long, short, short, long. Now that's if you take every signal. Now, it can be improved upon. You can increase it to 79% if you remove the counter trend signals and wait for a 3-bar confirmation. So in other words, if you've got a nice little uptrend like this, my recommendation would not be to short here, but would be to go long in these places. Don't short the counter trend trades. We're going to focus on the longs instead of the shorts, and that's going to increase your return from 33% to 79%. That's the back testing. It's been profitable on 29 currencies over the last 10 years using this time frame, which is a daily, an hourly, and a 10-minute time frame. So it's worked successfully on 29 currencies over the past 10 years. So, you know, it withstands the test of time. This is the most important slide in the presentation. What we're looking at here is your time frame horizon, okay? So when I'm looking at a daily chart, that implies that the time horizon will be weeks, okay? Now, it could be 1 or more weeks, all right? So it's going to project to the right of the screen 20 to 30 trading days. If I'm looking at an hourly chart, then I'm going to be in the chart for days of a time, and in most time, it's going to be and the minimum that I'll be in it would be 3 days, 3 to 5 days. And then if I'm looking at a 10-minute time frame, I know I'm going to be in that trade probably for about 4 hours, okay? Now, if it's smaller, if I use a 5-minute chart, it's going to be 2 hours. If I use a 1-minute chart, I'm going to be in that trade for 30 minutes. Those are minimums, okay? So it's very important for you to pick your time frame, and for this talk, I'm going to be going a daily, a 60, and a 10-minute for the discussion of this, all right? So now let's break into what is this, all right? This is what you want. It is the #1 technique used in Japan. In the past 7 years, it's been the #1 selling technical analysis book 7 years in a row. And if you've never had to translate something from Japanese to English, it's a pain in the rear end, and it can be expensive. You're going to know exactly what's happening in seconds. It's designed to identify trends and signals very quickly. All right. Let's go into the next slide here. So here's the edge. Here's why I like using this strategy / tactic / indicator so much. #1, it gives you what happened in the past, which is pretty normal. Almost all indicators will do that. Secondary, it's going to give you what's happening right now in the present. A lot of other indicators also tell you the present. But the most important thing is it's going to forecast for you in the future where your thing will probably go, whether it's going to be going to overhead resistance or if it's going to sell off into support. So now you should be looking at a black chart with a blue ribbon going through it and some price action. Do you see that on the screen? Yes, all right. Now, this is a daily chart of the ES. Don't let that bother you. It doesn't mean anything. So first off, the strategy or the tactic or the indicator is called Ichimoku. Don't worry about reaching for your wallet yet. Right? I'm not trying to sell you an indicator. This indicator is freely available on almost every good trading platform out there. It's called Ichimoku. I'm going to teach you how to use it today. So this is called the cloud, C-L-O-U-D. All right. Now, the theory behind Ichimoku is if whatever you're trading, the price action, if it's above the cloud, that's going to be considered bullish. All right. So in this case scenario, you can see the S&P 500 would bounce off the cloud, go up, come back retrace, bounce off the cloud, good bullish move here, sell off and bounce off the cloud, sell off, bounce off the cloud, bounce off the cloud, bounce off the cloud, bounce off the cloud. If it was to sell off again, it would come back down here with the anticipation that it's going to bounce off the cloud. So that's the first piece, C-L-O-U-D. Now, if the price action was below the cloud, that would be considered bearish, and we'd want to stay on the short side, okay? Second piece of Ichimoku, first piece was the cloud, C-L-O-U-D. Second piece is called the turning line. I'm just going to abbreviate for turn, T-U-R-N. And this is a 9-period midpoint average. It's not a 9-point moving average. Structurally, they're different things, okay? And I'll show you how to calculate that. So we've got the turning line, we've got the cloud, we've got this is going to be the most intermediate short-term support. And now we have a third piece here. Now we have the cloud, C-L-O-U-D. We have the turning line here, T-U-R-N. And then we have the standard line, S-T-D, maybe something that you got in a high school or college. I don't know you. No judgments here. So we've got the cloud, the turning line, and the standard line. Now, we're bullish in nature here. If this breaks the yellow, where is the next place that whatever this is trading? Where will it probably go to? Well, it'll probably sell off to the purple right here at 1909. So at 1909, we would look to get long with a tight stop loss on the anticipation that this thing would probably bounce and go higher. If we're wrong, then what we would do is we would get long at either the top of the cloud or at the bottom of the cloud, okay? Makes common sense, right? Last piece of the Ichimoku cloud is the lagging line. So once again, C-L-O-U-D. We have the turning line, T-U-R-N. And then here we have the standard line, S-T-D. And then here we have the lagging line, L-A-G. And this is just the past. So this is the past. This is the present. I'm going to call it now. And then this is the future, all right? The future is telling us that the price action is sideways to slightly higher, and if it goes to sell off, this nice fluffy little blue cloud should act as a mini trampoline, and we should bounce off of that. Until the point that we have 1, 2, or 3 bars close below that cloud, then that's going to be a short trade, and we want this white line to follow with us to confirm that. At that point, we will stop buying long, and we will begin to aggressively short things. All right, so here's what the turning line looks like. It's the one that's closest to the price action. The turning line is the midpoint calculation. You're going to take the high and the low of the last 9 days, and you're going to divide them by 2, okay? You're going to take the high and the low of the last 9 bars and divide them by 2. In this example, we're using daily charts, but like I said earlier, we're going to use the daily, 60, and a 10-minute time frame. So if this is today, we count back 9 days, 9, 8, 7, 6, 5, 4, 3, 2, 1. We mark the low, we mark the high. The high here is 465.75. There's that number. I'm going to take this number up here and I'm going to add it to it. I'm going to go 434.39. And then you can usually do math faster if you do it like this. Instead of adding from left to right, you add, or from right to left, go this way, add them this way instead of this way, and then you just go, this would be 900.14. All right, so there's that number, and then I'm going to divide that by 2, which should be 450.07. And no, I'm not a math genius. I cheated. The numbers are right down here because there's no way I'm that smart. But anyway, that's how you come up with that number, and that number on your indicator is going to be shown as a output. All right. So it's 450.07, so that's the number. So if we sold off on whatever this is, we want to buy that sucker at 450.07. Okay? Let's go to the next thing, the standard line. The midpoint of the high and the low of the last 26 sessions. You're going to take the high and the low of the last 26 bars, then divide them by 2. That number is your midpoint, okay? Same type of deal. Now, we've got this. This is the turning line, T-U-R-N. The green one here is going to be the standard line. It's the one second closest to the price action. And what we're going to do is we're going to calculate that. So we're going to take today, right here. This is today. There's today, 26. Count back 26 bars. Look for the low and look for the high. Take this number and this number. Add these two creatures together, which will give you 850.85. You then divide those. You then divide those by 2, and that's going to give you 425.42. All right. Now it's always going to give you an output on your indicator. It's going to say there's 425.42. So if this line broke, okay, like if the 450.07 did not hold for us, then the next place that we would look for a target would be right in here, okay, whether we're long or short. All right, so that's that one. Let's go to the next one, which is going to be cloud span A and cloud span B. The midpoint of the turning line and the standard line shifted 26 bars forward. So what we're going to do is we're going to take the, anybody remember what the red line is? That's right, it's called the turning line. The green line was the one second closest to the price action, called the standard line. And then what we're going to do is we're going to take the midpoint between these two. We're going to take from here to there, take the midpoint, and then shift it in the future. Shift it into the future, 26 bars. Pretty easy, right? Here's another one. You're going to go turning line, standard line, midpoint between those two, shift it, 26 bars. Okay? All right, cloud span B. You're going to take the midpoint of the high and the low of the last 52 sessions, and you're going to shift that 26 bars. So what you're going to do is, let's take this is today, and this would be 52 bars back. Then I'm going to take the midpoint in between those two creatures and shift it 26 bars in the future. That's going to give us our overall support or resistance on the cloud. Now the lagging line is the price line close, shifted back 26 bars. So what that looks like is this blue line right here, and the price action is shifting back 26 bars. So if this was today, what you would do is you'd shift this back all the way back here, and that's your previous close shifted 26 bars to the left. All right. Ichimoku cloud charting signals. When the lagging line crosses the cloud, that is the strongest, S-T-R-O-N-G-E-S-T. It's the strongest, but it's also the slowest. All right, but it's a good signal that we like to confirm with. Second best is the price crossing the cloud. When the price crosses either up or down through the cloud, that's going to change from bullish to bearish. The price and the lagging line touching the cloud is also a good fade signal. In other words, if they touch, they should be at support or resistance. We'll go through that. The cloud spans crossing are also when they change colors from blue to green or red to green or blue to red. The lagging line, the level of current prices. The lagging line is usually the current price action shifted back 26 bars, and then the turning line and the cross and the standard line, when they cross, we call them a crisscross trade. It's fast, but it's not the most reliable thing in the world. So those are some cloud charting signals that we're going to look at. So let's go through these really quickly. So number one, do you see, just give me a yes if you see where this blue line is crossing the cloud. So this was considered a major uptrend as Apple was trading above its cloud, okay? And we were going to stay long Apple until this blue line crossed below. Now remember, based upon this definition, that's 26 bars lagging, that blue line is, right? Because price action's here, this is lagging 26 bars. So it means you'd have to go, from this price action, you'd go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right in here somewhere, right? So it's not perfect, but it's very strong, okay? So that's a good signal. So in other words, if the price action went above this, like right now, this is considered bearish in this slide until the price action either goes 1, 2, or 3 bars above the cloud, and if the blue line will cross that little red cloud for us. That'd be a really good conservative trade setup. And I'll show you that in the live trade setups. Everybody following me so far? Give me a yes if I'm making sense here and if I'm not losing you. All right, I'm getting yeses. That's perfect. All right, so that's one signal. It's a little slow, but it's a great confirmation signal. If you have 1 bar that goes above the cloud, that'd be aggressive signal. 2 would be moderate, and 3 would be conservative. And if you waited on this, it's lagging line, that'd be super, super conservative. All right. All right. So here's another signal when you have 1, 2, or 3 candlesticks crossing the cloud. So we were a major uptrend here in Apple, right? Do you see this when it crosses? Just give me another yes here if you see it. So if you got 1, 2, or 3 bars crossing below the cloud, that's a now and that's a short. All right. If 1 goes below, it's an aggressive short. 2, moderate. 3, conservative. And then if you want to wait for the lagging line, super, super conservative. So that would be a good short. So let's say that you just shorted it here, and then you were going to cover it when it went back above the cloud. Does that make sense? So that's the theory behind this thing and how you're going to use it. And then we're just going to use multi-time frame analysis to get in some really good trades. Now, that's another trade setup. You can also do counter trend trades. So in other words, this is a trend. It's to the downside. The price action went up to the bottom of the cloud, so I would short that. I'd also short it when the lagging line touched the bottom of the cloud there, on the anticipation that, hey, we should still be in a massive downtrend. My bet is this thing's going to roll back over. Now, sometimes that works, sometimes it doesn't, and not everything goes in an up and down trend forever. They got to shift. So some of this money that you made from here all the way down to here may be given back on this trade or this trade, so don't sweat that too much. And then the last signals are when the turning line and the standard line cross. So up here you had a massive uptrend. You were above the cloud here. Here's your first crease. So I wouldn't short that because we're still bullish at that point. Okay? But as soon as we cross below the cloud and then it crosses up once and then crosses back down again, I have no problem at all shorting that. Crease, cross, short. Crease, cross, short. Make sense? So that is some of the signals. So bullish signals. Price above the cloud is bullish if it's above the cloud. Prices in the cloud are bullish if they come from the bullish side. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is an earlier but less reliable warning signal of trend change. And the price and the lagging line will often find support at the cloud's edges. Cloud spans crossing may be a sign that the trend is about to change. Be on the lookout for thick clouds after a run-up, which could be a trend change. All right, that's the bullish signals. The bearish signals are the exact opposite. Prices below the cloud are bearish if the price is below the cloud. Prices in the cloud are bearish if they come from the bearish side. The lagging line crossing the cloud is the main signal of trend change. And then these are exact same rules of the bullish. All right, I'm not going to read these for you. What I'm going to do is I'm going to get a quick drink while you read those, and then I'm going to go on to the next slide. There we go. All right. So let's remember that these results I'm giving you are hypothetical and simulated according to Rule CFTC Rule 4.41. All right, these are the stats again. So we're not going to do long, short, long, short, long, short, short, long. We're going to focus on trend trading. We're going to wait for a 3-bar confirmation. In most cases, it's going to increase our return from 33 to 79%. And this is what it looks like on the past 10 years. On 29 currencies, it's been profitable using a daily, an hourly, and a 10-minute. We're going to make sure that we use good time frame selection. I'm going to be using a daily, an hourly, and a 10-minute when we go live here. And it's very important that you understand that my favorite ones are daily, hourly, and 10-minute. You can go longer and you can go shorter, but these are the ones that I have the back testing, the side testing, and the forward testing on, okay? There is a very high probability that you will have the question of what is the best stop loss to use. So I am a huge fan of a parabolic SAR called PAR SAR. Also, this is a free indicator that most platforms have. And like I said earlier, Ichimoku is a free indicator on most good trading platforms. You can use the bottom of the cloud if you're long, or you can use the top of the cloud if you're short. Really quickly, just tell me who you clear through. And all that question's asking is, who do you use for charts? You use TOS, TradeStation, Ninja, eSignal. Like, who do you physically use to chart your stuff on? Let's see here. Options Express, MetaTrader 4, TOS, Thinkorswim. So a lot of TOS guys. So TOS has got it built in, so you don't have to buy it. You don't have to buy the indicator. It's built totally in. Ninja, you have to go to a forum to get it, Tim. Multi-chart should have it. Metastock's got it. TradeStation's got it. TradingView and TradeStation. Sierra's got it. So most of those ones that you are listing off do have it. I don't know if Options Express or Fidelity have it. Amit or Rick, I don't know. We'd have to check. Yeah, multi-chart should have it. Yeah. All right. So that concludes the theory part of this webinar. So what I'm going to do is I'm going to exit out of here. I'm going to hit discard ink annotations. And now what I'm going to do is I'm going to show you how I scan for trades, and I'm going to show you some trades that I'm in right now, okay? So for the rest of the thing, or for most of it, until I get done here, it's all going to be live, right? Because I think it's a better way for you to learn and for me to teach. So do you see a screen? First, let me show you a real cool thing that you can do in TradeStation really quickly. So if I use the cloud, this is going to be my daily time frame, right? So I'm just going to use this as my daily time frame, and then I'm just going to go like this. I'm just going to make this big. So I'm going to go right click, and I'm going to hit copy window, and then I'm going to go paste window. The reason I'm doing this is I'm going to link these three charts together, and I'm going to make a daily, a 60, and a 10-minute right here in front of you, just show you how easy this is to do. It's not hard at all. And then what I'll do here is I'm going to go, okay, this is going to be, that's my daily. This over here is going to be my 60-minute chart. There we go. And then I'll go right click, and I'll go copy window, and then I'll go paste window. And now anytime that I change any one of these windows, this will just change for me. So that's going to be a 10-minute, okay? Now, one of the best ways you want to scan first is on a daily chart. So we're going to spend a little time scanning on a daily chart. Now, this indicator, if you're using TradeStation, here's all I did in order to make this work, okay? So this is the 30-year bond, because I'm short 30-year bonds right now, so I talk about them a lot. Let's say I didn't have this indicator. I'm going to sync all these windows up with green buttons so that they all change at the same time. This is how you set up this indicator to work on TradeStation. You go right-click, and the first thing you need to do is go Format Window, and then go to the status line and make sure the spaces to the right are set to 25. If you don't, the indicator won't display correctly, and I'll show you what error message you're going to get if you don't. So if I go right-click and I go Insert Analysis Technique, and then if I just go Ichimoku, which starts with an I, it's going to be underneath my name. Hold on, right here. Ichimoku Cloud, and I just hit OK. See where it says tried to reference more bars than allowed by the current bars on the right setting? To me, that's just screaming, say, hey, Einstein, you did something wrong. Tried to reference more bars than allowed on the current bar to the right. So I got to fix that. So all I do is I go in here, I go right-click, I go Format Window, spaces to the right 25 because this indicator is to the right of that. And then I just go back in here and I status this sucker back on. Pink. Now the indicator's back on there. Okay. Now the only difference is I usually change this line, the lagging line, to a white line, just because I like the white color on the background better. So I'll just say white, and I usually make it just a tad bit thicker, and then boom, I'm done. Okay. Now what I'm going to do here is I'm going to go get some radar screen right here, and I'm going to go copy window. And then I'm going to go over here to the cloud chart, and I'm going to put this radar screen in here. Watch this. And I'm going to go paste window. Now, since a lot of you guys are stocks and options traders, I'm going to show you how to scan for these things in TradeStation. I'm also going to use stock charts. So watch this. I'm going to go Insert Label Row. Now, down here, I'm going to go right-click. I'm going to go Insert Symbol List, and I'm going to go TradeStation. Go find me the stuff that's trading above $5 and it's taking decent volume. And it's going to say, okay, got it. Now, does everybody see that I've populated this with, give me a yes if you're following me so far. I've populated this with potentially 227 equities, okay? Now, what I want to know is I want to know when something's breaking above or below the cloud, because that makes sense to me. That's one of the most powerful trades I want to be in on. So I'm going to move this over to the right side here just a smidge. I'm going to hide the 60 and the 10, just put them out of the way for a minute. And then on this one, now what I'm going to do is I'm going to format an indicator. On this thing, I'm going to go right-click. I'm going to go Format All Analysis Techniques. And then all I'm going to do is I'm going to add Ichimoku. So I'm going to go back down here and look for the I's. A, B, C. Oh, I went the wrong way. I can't spell. A, B, C, D, E, F, H. There we go. Ichimoku Cloud. I'm going to hit Add. And then I'm going to go, all right, now it's going to sit here and do the math. It's going to go, and yes, the sound effects cost extra. And it's sitting here crunching. It's going, see how it's doing that? Now, I don't care about the tin, kin, ching, chung. I don't care about any of that stuff, whoever they are. What I want to know is the location of the price of the cloud. You see this line right here, price location? Now, watch what's happening. You see where this says below the cloud? So if we sync this sucker together here and we go, well, A says it's below the cloud. Yep, it is below the cloud. It's been below the cloud 1, 2, 3 days. What I want to search for is when it just went below the cloud. So I'm going to double left click. Oh, look at here. New below the cloud. PCG on a daily is newly back below the cloud. Pretty cool, right? And now what I can do is I now know I've got new below, new below, new below, new below, new below, and then here's new above. So the only new above I have is USB. So it's a new long, and now I can either day trade that, swing trade that, or invest in that sucker. Here's one for TWX, new above. That's another good long, right? Not too shabby. Here's one that is, hold on, let me shift, because this thing's shifting on me. Let me go here. Click, 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 click. There we go. All right, so USB, TWX, those are two decent longs. Here's PTN, a decent long again. Oh, I like that one, really good. That looks good. Patterson Energy, PTEN. That's a new long, and then if it can clear 2140, it's probably going to go higher. Let's take a look at IWM, which is the Russell. That's a new long there too. Look at that, new long here on the Russell index, IWM with a target of 128. Let's go AXP, newly above right there, and then PEP, also that one there is going to be newly below, and then PCG is newly below. Now, you may be saying, that's great, can I do that in TOS? You can do something like that in TOS, but if you don't have TradeStation radar screen, let me show you a way that you can do it really quickly. So you're going to go over to this free website called stockcharts.com. Does everybody see stockcharts.com? Just give me a yes. What you're going to do is there's blue boxes on the right-hand side. You're going to scroll down to the blue box, and you're going to go down here where it says Additional Tools, okay? And you're going to go Predefine Scan Results. You're going to click that one time, okay? And then you're going to scroll down through Technical Indicators, skip that. You're going to come down here to the candlestick patterns, and you're going to go to the last ones that say Ichimoku Cloud Patterns. So Ichimoku Patterns. Now, do you see where it says moved above the Ichimoku cloud, moved below the Ichimoku cloud? You're going to hold down the control key on your keyboard, and you're going to go click, click on your mouse. That's just going to open up a new tab, and that's going to say these are the ones that moved above the cloud, and these are the ones that moved below the cloud. Now, if we're all looking at the same time, it's a free service. It'll lock up the browser sometimes. It'll lock up their servers, and it'll just take a while. So we're going to sit here and just let this thing crank out its little math here, and I'll show you how to use this free service to scan for some decent trades. And then we're going to go back in here, and we're going to look at the overall state of the markets. Now, we've got, these are all things that have moved above the cloud. We're going to format this. We're going to filter it based upon volume. So just double left click over here on the volume tab, and it'll filter it based upon the volume if you do that. We're also going to do, these are all the ones that move below the cloud. We're going to filter for volume here by just double left clicking the volume there. And it'll get to working on that thing, and it'll just, it just takes a little bit because it's a free service. Now, it may take us longer than we have here, so I may not be able to do it, but we'll see. And then what you want to do is you want to trade something that's taking some good volume and has, you don't want to be trading stuff less than $5 or $10. Those are going to be penny stocks, and you want to stay away from those. So let's pretend that this thing's, oh, there you go. So there you go. There is decent volume in all these things. We've sorted it from most volume to least volume. So on this one here, you see IWM. See IWM ETF. Like I wouldn't trade this in 27 cents ONV. Just don't do stuff like that. And if it says over the counter market, don't do any of those either. So this is a good example, IWM. So then you just click this chart button right here, and then all you do is you just chart it, and you can apply the indicator here. You can go overlays, and you can go, okay, I want Ichimoku full, and I don't want anything else on here. And then I want to hit update. And it should, look at there, newly above the cloud. You see that? So now there's a simple way for you to find better trades. And it's one of my secret weapons to find better trades in order to find if it's breaking above or below the cloud. So the Russell looks like it's going to be on fire and take out this area of 127. It's probably going to go higher than that. Does that make sense? Both ways are really effective. TradeStation, I think TOS has a way to do it too. Stock charts is free, won't cost you a dime, and that's a way that you can find some really cool trades. So let's go through the markets here. So now that I've shown you how to do that, I want to go through and help you with your market direction a little bit here. I'm just going to go through all the markets that I trade, and I'm going to show you where I think they're going, and then you're going to give me symbols. All right, so ES is sideways to slightly higher. It's a little bit of congestion here. You got to be careful. It broke out above 21.13 today. It's probably going to go higher, right? So I would say next target will be 21.50. It's sideways though. The Dow is still in a major uptrend. It's above the clouds, above the turning and the standard. Only problem with it is, it's in this little tight little box. So be careful with that. NASDAQ, also, looky here, nice little uptrend. It's above the turning and the standard line. Looks like a decent long, but it's sideways because it's in a congestion phase. Not bad. Russell, all right, Russell is breaking away. It's sold off to the cloud, and then boom, jump back up here. So it's a brand new long today. Looks interesting. Now, let's go through and let me show you a couple of things that I'm actually in right now. And since you are now Ichimoku devotees, on 2014, which way you reckon I was trading bonds from at the end of 2014, the whole year of 2014 last year? Which way do you reckon I spent most of my time in the 30-year bond here? Long or short? Yes, that's right, correct, long. Now, where do you think I'm spending most of my time in the bond market now? Ever since we broke here, I've been massively short bonds. Short, short, short. Now watch. Bounced up, counter trend trade, and then just 3 days ago we got re-short again because we hit on overhead resistance here on the bonds. So now I'm short. You can do TLT and TBT too. Yeah, we'll cover that. Does that make sense? Now let's take a look here at FGBL because I trade this creature a lot too. Which way, and this thing just makes me look really smart, which I like because I'm not that smart. Which way do you think that the little fat redneck from Kentucky was trading the Euro Bund, which is the German bond, in 2014 going into 2015? Do you think I was more long or short there? It looks really easy. That's because it is. I was long, correct. Now, which way on the Euro Bund is the little fat redneck from Kentucky right now? It broke here. I'm short. I let it retrace into overhead resistance here, shorted it again, and now I'm short again. Does that make sense? So those are some really good markets to trade. Let's take a look at GC gold. Gold right now is sideways. It's stuck in the cloud. There's not a huge advantage. Remember we were talking about that lagging line we wanted to confirm? Well, you see this white line? Let's make this white line a little thicker to kind of just help us out here. You see this white line? It's not above the cloud yet, and it tried to go above the cloud, so that's going to hamper our performance going higher. So right now, gold's a leave me alone. Let's take a look at crude oil. So in crude oil, which way you reckon I was trading last year in crude oil when it broke this cloud right here? What was I doing? Yeah, I was shorting it. And every time it touched the cloud, you guessed it, I was short again. And when it did crisscrosses, I was short again. Now which way am I trading crude oil? Now which way? I'm going to make this line just a little thinner. That's a little grotesque. It's so thick. Okay. Now which way am I playing crude oil? That's right. I'm now playing it on the long side. I'm above the cloud. I've sold off. I'm now back above the turning and the standard line. Good little long here with targets of about 75. Does that make sense? It's pretty easy to do, right? So now what I want to do, I think, what time am I supposed to be out of here? Somebody tell me again. 11, 12:45. Somebody just give me a time stamp here, and let me give me some symbols, and I'll break them down for you. Okay. Now there's more tactics that you can use on this. How did you determine the target? I do the targets in my head based upon how much I'm risking. All right. So SLV is a sideways right now. The lagging line's in the cloud, and it's below the turning in the standard line, so that's a leave me alone. TS, let me see, TASR, Taser. Taser is a screaming long, lagging line. It's above the cloud, both above the turning and the standard line. You'd be long at 31.77. Next target would be 35. Tight stop loss. CAD versus JPY would be a screaming long with a stop of 99.41 and a target of 102. Facebook is it's a better long than it is short, but it's kind of sideways, right? But it's a better long than a short. I would wait until it got back above the cloud here. So this one is wait a few days. Twitter, TWTR. Twitter is a great short. It's broke below the cloud. It's going substantially lower. Tight stop loss and a target of 34. BEN, B-E-N. BEN is a good short with a stop loss of 51.57 and a target of 49. NFLX. Netflix. Oh, Ichimoku means at a glance. You're immediately going to know what's happening at a glance. Netflix is a great long. Stop $5.91, target $700. USO is obviously a long because crude oil is a long. Long here at 20.33, stop 19.95, target 24. Lumber Liquidators is a short. It's been a short ever since it broke through the cloud here, and it continues to be a massive short. Now, it's probably going to bounce a little bit. It went above the turning line today, so it's probably going to bounce to here, which is 26.89. Short the heck out of it when it happens. CMG is, hold please, a good short with a stop of 622 and a target of 5. BUD is a hurry up and wait, needs to get back above the cloud, so wait for that one. Natty Gas at NG. Natty Gas is a better short than long, and it's in overhead resistance. Short Natty Gas at 265. You have limited potential of 250 though, so it's not a great trade. KORS, Coors. Coors is a good short. I would short it now. It doesn't look like it's going to go to 53. I would short it, use a stop of 53.74. Target would be $40. Let's see here. Qualcomm, QCOM. I don't usually look at volume for the Ichimoku in most cases, but you can. There's nothing wrong with it. Qualcomm is sideways. It needs to get back above 70.04, and then it would be a decent long. Yep. US CAD on a 10-minute. Randy is just pushy. Just change time frames is what Randy said. Hold on here, Randy. USD CAD. On a 10-minute, so on the daily, it's an aggressive long because you don't have the lagging line support, and then on a 10-minute, just let it update here. On a 10-minute, it's a long. It's sold back off into support on the cloud, so you'd get long here. Stop 124, target 124.59. We'll go back to the daily. It's just easier for me to stick to one time frame. TWTR already covered, but I'll do it again. It is a short with a tight stop loss and a target of 34. TMUS is a great looking long here at 38.42, stop 37.19, target of $42. All right. So let's go back to PowerPoint here. So now do you see how easy this strategy is to use and how powerful it is? Everybody's got it. It's already on your platform. You now know kind of how to use it. Okay. All right. So we looked at some live charts. Here are some success stories. The course was awesome. I've taken one bond trade and made over $900. Do you think I'm happy? I just entered the bond trade, shorted again, where I took profits earlier today after you made me greedy for possible further drops. I'm happy dancing. This is the first time I've had a successful trade during a course. I have the hardest head in the world. You couldn't have made it simpler. Mary. Here's one from Greg. Dude, thanks. You are likely the only reason I have kept at it with this trading, and now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the next gold trading class. Thank you so much for all you do. Here's one from Ron. The webinar series was a great experience, very informative and educational, lots of fun. But that's no surprise. All of your courses have been great learning opportunities and great values. Cheers, Ron. So my question to you is, will you be one of our next success stories? We are inviting you to join us. All right, now who is this for, and what is this? Who is this for? If you're serious about making real money in the markets, you and I will probably get along. If you are looking for a proven system, if you can follow a simple set of rules and directions, and if you understand that your success is tied to you taking action and not me taking action, you and I will probably get along just fine. Now, who is this not for? It's obviously not for holy Gale seekers, and I'm dyslexic, so I need to change this in the PowerPoint. It should be holy Grail seekers. If you think you're going to take $10,000 and turn it into $10 million by the end of June, not going to happen. You still have to do trades. There's going to be some winners, there's going to be some losers, and you're going to build your account over time. All right. So if you suffer from hopium, if you trade 500 times a day and you just trade because you like the action and you're not really worried about the performance, this course is not for you. If you suffer from guru-itis, or if you're a guru surfer, if you follow me and 140 other trading gurus online, do yourself a favor, follow 3 to 5 of us, unsubscribe from everybody else's stuff, and only subscribe to the people that add value to your life. If all they send you is promotion after promotion after promotion, I mean, they're just taken. They should give more than take. So if they're adding value to you, keep them. If they're not, get rid of them. The problem with following 15 different trading gurus online is we're all going to have a different opinion, and it's just going to confuse the shit out of you. So pick 3 to 5 and follow them and get really good at that. If you can't make a decision, obviously this is not for you. And if you like to make things more complicated for no good reason at all, then it's obviously not going to be a good fit. All right? There are 3 types of people in the world. There are those that make things happen, there are those that watch things happen, and there are those that asked what just happened. Now, hopefully you're in the top 2 groups. All right? So here is what I have for you. Here is a fraction of what you'll learn in the #1 best-selling Ichimoku course on the market. Now, I have to say outside of Japan, because I don't sell this course in Japan. I sell it everywhere else in the world. So I have the #1 best-selling Ichimoku course on the English-speaking world. I'm going to give you 7 proven setups. 7 proven setups. I'm going to give you trading rules and indicator settings. Heads up, I use the defaults. I'm going to give you cheats and checklists of all the 7 trades that I'm going to share with you, with entries and exits. I'm going to share with you the stop losses and the targets. I'm going to show you how to scan the markets for Ichimoku, which I already showed you how to do that. I'm going to teach you how to filter out the best ones to take and how to filter out the ones that are just going to be duds, so that you'll never guess what to do next. And I'm going to show you how to avoid head fakes. There's this thing we call a lagging line uppercut. If you try to go short or long when this happens, it's almost guaranteed that you're going to lose money. So you have to know how to avoid that. All right? So that is what you're going to learn in the course. Here is the guarantee I can give you. It's the only guarantee I can give you. I can't guarantee you'll be alive tomorrow, but I'll give you a 100% satisfaction, no questions asked guarantee. If you don't love the course, I don't want to keep your money. You just call and we'll give you a refund. I always over-deliver, period. My goal on any course, indicator, or any training that you take from me is that you always get a 10 times X on your return on your investment, okay? Now, there's obviously a catch. There's always a catch on these webinars. But if you go to hubertsenters.com/earn, and I'll put this in the chat box, you can also call our telephone number. We have operators standing by. They're right behind me. You can probably hear them in the background. Michelle and Jared and Lisa and Gladys are here to take your call. So if you go to hubertsenters.com/earn, or if you go to area code 859-963-3445, that's also in the chat box for you to see, here's what you're going to get. I'm going to share with you the #1 best-selling Ichimoku Cloud Charting Secrets course. It's valued at $197. I'm going to show you how to use Ichimoku with candlesticks. It's valued at $97. And then I'm going to give you one follow-up webinar and 1 day of live trading. Okay? Those are all each valued at $97. So that's a value of $488. Special offer for today only, $97. If you go to hubertsenters.com/earn, it is only for the first 25 people on this webinar. Once we get to 25 people, we shut down the cart and you can't place an order. All right? So any questions for me regarding the material I just covered with you and or anything else? And that is it. I'm just going to take a few questions. I think I've got maybe 5 more minutes, I think. Hey, John, what time I need to get out of here for you? Tell me.
Hubert, you've got actually about 15 minutes.
I got 15 minutes, so hit me with questions. What questions do you have for me about either the course or about the material that I just covered with you? You guys want to go back to, I can go back to, if we go to TradeStation here, using different time frames. All right, so let's go through that. I'll show you how I do that. I'm going to discard this. Let me put that on here, and let me see if I can figure out a way to put this on here so you can still see this. Has everybody got the link? hubertsenters.com/earn, and do you all see the telephone number 859-963-3445? Just give me yeses, and I'll just do this right here. All right, so multiple time frames you do like this. So let's say that we're looking at the 30-year bond, because I'm actually in this trade. On the 30-year bond, you see where it hit the purple line here on the daily? Well, then what I would be looking for on the 60-minute, it'd be a sell on the 60-minute and or the 10-minute. So let's say that you missed this entire day here. Well, you've got a crisscross trade. You see how it crossed back above the cloud here and then back on the 10-minute? So that's a new sell signal. Here's a new sell signal on the 10-minute. Back here was a new sell signal on the 10-minute. So that's how you do it. You ever use the BB squeeze? Well, Eric, considering I'm one of the shareholders and still current owner of Trade the Markets, yeah, I invented the TTM squeeze. So yeah, I use it. So. Hearing phone in the background, no answer. Oh, there's multiple phone lines here. So if you are calling, it's just other people are calling and they're taking your orders too. If you get voicemail, just leave a voicemail and we'll call you back. Was the 30 to 5-year? Yes, Craig. Yes, a yearly. Okay, thanks. What is the head fakes? Head fakes I cover in the course. I'll show you what. Let me see if I can find one really quickly here. Let's see if we can find a head fake here. Give me some symbols here real quick. Could you talk about USU15? USU15. Yeah, the 30-year bond, well, I'm just going to go at US. 30-year bond is going lower. It's going to drop to 148, and then after that, 144. Looks substantially lower. The cloud's working fine on it. Let's see if we can do Boeing here. Let me see here. Aha. So this is a potential lagging line uppercut. You got to be on the lookout for these. You see how this had, you had anywhere from 3 to half a dozen to a dozen bars below the cloud. You see how the lagging line is hooking back up through the cloud? Well, this is telling you that Boeing may not work, and it sold off into under support here. So it sold off into support. Now it's bouncing. But you see how the lagging line acted like it was going to go back below the cloud and it whipped right back up? This means that this trade could potentially skyrocket to the high side and be trading at 155, as opposed to something like Goldman Sachs, where you see here, nice little trend, good up move. Which cross would you use for a bull credit spread? I would use, depending on your time frame on that, Eric. If you're doing weeklies, I would use a 10-minute. If you're doing monthlies, I would use a 60-minute. And if you're doing longer-term credit spreads, I'd use a daily. Yeah. Taser, T-A-S-R. I thought I already did that one. Yeah. Taser's a good long with a long here at 31.56. Stop loss, you could use this as your most recent stop loss right there at 30.48, and your target would be around $36. Yep, you got it. Mm-hmm. No problem. No problem at all. How do you determine bars? How do you determine bars or time to target? On the stops, here's what I would do. So if I know I'm long from here, and I know my stop is there, that's one block, okay? And then if I know if I'm risking one block, I should be willing to make 2 or 3 blocks. So how I do my targets, if I know that's my risk, then there's one block, okay? And then I would go, okay, here's 2 blocks, okay, and then here's 3 blocks. And they're just all basically, I'm real visual, so I do everything visual. So if this is my risk, that's target 1, target 2, and then target 3. Does that make sense? I do everything real simplistic. I make everything, because as I trade a lot, so I have to keep the rules really simple. If I don't keep the rules really simple, I have a higher margin of error. So I keep everything really nice rules of thumbs. Risk 1 to make 2 or 3, risk 1 to make 3 or 4, risk 1 to make 10, depends on what I'm doing. What are your top 3, 5 recommendations for analysts that, what? Let me see here. How do you handle gaps through the cloud? On the gap like this right here, I would just go in the opposite direction. Yeah, like if it gaps through like lumber liquidators, right? Like this one right here, it didn't gap through, but it sold through it. But if you're up here and it gaps down, well, that tells you that you just crossed from bullish to bearish. I think I finally figured out how you figure your profit targets. You look at the risk amount and multiply times added the current prices that you're targeted. Yes, was easy. That's correct, John. You got it. What is your top 3 to 5 recommendations for analysts that complement what you do? I have signed up for a dozen, and I'm overwhelmed. There's some really good guys out there, and there's some guys out there that can't trade their way out of a wet paper bag, right? Yeah, to tell you the truth, I don't know who's good or bad. I know tons of people in the trading industry. It would be hard for me to recommend which ones to follow because, if I don't like them, but if they're making you money, it's a good fit for you, right? Yeah. There's some really good guys out there. Most people that are good and decent that want to help people learn how to trade better usually live trade in front of them. If they're not willing to live trade in front of you or show you a P&L statement or some statements and stuff, usually it's a sign that they don't really trade. A lot of people, like I get propositioned every month to like send shady emails for penny stocks, and I'm like, please God, quit sending me stuff. I'm never sending it out to my people. And then a lot of other folks will try to get me to promote their product, and they're like, hey, and I'm like, I always ask them for a trade statement. They're like, oh, here's an Excel spreadsheet. I'm like, no, not an Excel spreadsheet. Send me a physical brokerage statement for the last 30 days. Like, I don't care if you made money or lost money. I need a brokerage statement, though, not an Excel spreadsheet. So those are some usually telltale signs. Like, if they're not willing to, like, show you some live trades that they do on a consistent basis without any safety net, like not on a recording like live, or if they can't produce trade records or account statements, it's usually a red flag, right? So just, you can trust people, just verify what they're telling you, and you'll usually be pretty good there. Nice how that lines up with swing trading high. Yep. 3 to 5. Love simple. I'm older now. Very nice. Thank you so much. Just purchase course. Thank you, James. Appreciate it very much. So the link for you to purchase is hubertsenters.com/earn. It is in your chat box. Here it is once again. I can hear Michelle taking orders in the background, and the phone was ringing. There it goes again. Area code 859-963-3445. You're going to get the #1 best-selling Ichimoku course. I'm going to teach you how to do candlesticks. You know what? Let's change this. I want to add more value to your life, so let's do this. You see where this says 1 follow-up webinar? Let's do 4. So this way, if you have any questions at all, you'll get more value for your money. Does that sound good? Let's do this. And I'll do that where I'll give you 4 live follow-up webinars. I do a thing with my HSIC members called Technical Tuesdays. I'll throw you in that thing. And if any questions that you got, you'll have 4 follow-up webinars for the next 4 weeks. So there, I just gave you more bonuses right there just on the fly. All right. So here's what you're going to learn in the course. I'm going to go back up to here. We're going to go to, you have 0 risk, and because we have 100% satisfaction guaranteed. And here's a fraction of what you will learn. Let me see if I can get PowerPoint to cooperate with us here. Thank you, Bob. I appreciate it. Thank you. Here you go. Fraction of what you'll learn. #1 best-selling Ichimoku course on the market. 7 proven setups. 7 of my favorite setups for Ichimoku Cloud. Trading rules and indicator settings, checklist with cheat sheets, with entries and exits, stop losses and targets, how to scan the markets, how to filter out the best trades so that you'll never guess what to do next, how to avoid head fakes. That is what you're going to get in the course. And then I bonused you. The offer was for 1 live follow-up. I'm actually going to make it 4. So Ichimoku course, how to use Ichimoku with candles, 4 follow-up webinars, 1 day of live trading. You'll be able to see me either make money or lose money. All right. Let me check, see here where I'm at. All right. So this is the bond trade that we did last night in our bond trading boot camp. John, did you tag it? You doing good on this? So we were trying to do an 8-tick reversal on the 30-year, and on this one, if you learn how to do Ichimoku, you can do this type of stuff, although this is not a particular Ichimoku setup. I only took $156 worth of risk on this trade, and this morning I woke up to this pleasant little surprise of up $703, and at one point we were up to $796.88. So now someone was asking like how you do trailing stop. So if I'm short on a signal, do you see these little purple and cyan dots? This is called a parabolic SAR. So this is how you trail the stop, trail the stop, trail the stop using this mechanism. You can do that, and I teach that in the course in painstakingly detailed. Yep. Can you scan for Forex pairs? Yeah, I can do that. It's not a problem. In TradeStation, I can do it in TradeStation, D, but I don't know if stock charts will allow you to do that, but I can do it with TradeStation, yeah. Thanks for including the webinars, Santa Hubert. Thanks, James. Appreciate it. What do you think about vendors who sell you their software and trading room and only show you trading in sim? Bullshit is what I'm going to call that. I mean, if they're trading it, trade it for real, right? I've been a professional trader for 20 years. I always trade live in front of people. Some days are good, some days are bad. I think if you've been a trader for more than a week, you understand that we don't all make money every day, right? So I don't have a problem showing people what I do, if good, bad, or different, warts and all. I think it's how you learn. You like if they're going to sell you a piece of software and they're always just going to do sim, just go, hey guys, just open up a. It don't have to be a huge account. Open up an account with $20,000 to $50,000 of all the money you're making selling the software, and just let the system trade, right? That's how I look at it. Now, I've invested in a lot of different systems, anywhere from $300 to $98,000 for a system. Different systems perform differently. So, I think that, Bubba, you need to be on the lookout. They should trade their own stuff. All right. Can we see Forex pairs? Yeah, what do you want to see on the Forex pair? Can you look at the US dollar? Yes. Cash on DXY. The dollar is it bumped its head on overhead resistance. It broke down here. Lagging lines are short, and the dollar is a short. So this is going to go lower. All right. So EUR versus CAD, CAD. This is a Forex pair. That is a screaming long. Look at that. That's a pretty trade. Who found that? Ross. Great trade. So you got 1, 2, 3 bars above the cloud, and the lagging line is confirming. That is a good long. Right now at 140.30. Stop of 137.32. Target is going to be about 146. Nice trade. Very nice trade. All right. Very nice. All right. Any other symbols you guys want to look at? Hit me. Stock symbols. Anything. I'm going to do it until Dan tells me I'm out of time. I will take symbols. IBB. Okay. IBB is a good long at 365 here. Stop loss would be 349, and the target would be around 395. AMZN, heads up, full disclosure, I'm long Amazon from $75. So I like it on the long side. It's above the cloud. Good long today. Stop loss of about 420. Target of 480. DAL, Delta Airlines is a new short. It's below the cloud, lagging lines below. Only problem is it's got a little support. It's got to break through. If it breaks this support at 41, it'll open up the floodgates to 36. AAPL, you guys are calling like crazy right now. Apple is a good long. I would wait for Apple to get back above 131. My stop would be 128. My target would be 140. GBP, EUR. I must have did it wrong. GBP, EUR. Nope, TradeStation just does not like it. Let's try this. GBP USD. There you go. This is a decent long, but here you got to wait. You either got to let it test the bottom or the top of the cloud here, or wait for it to get back above 154.29. Okay. GM, pretty much the same thing. So you don't need it. Pretty much the same thing. MNST. MNST is a brand new spanking short, aggressive long, conservative, moderate, super conservative. Good little short here and a Monster Energy drink. So short it now at 126. It's probably going to drop to 110. Oh, EURGBP makes much more sense now, James. All right, so this is one you got to be careful with. You've got 2 bars above the cloud, which is a moderate long. You need the lagging line to go above the cloud in order for it to be official. All right, guys, I think I'm out of time. Here is your link to order once again. I'm going to turn it back to Dan. HubertSenters.com/earn, area code 859-963-3445. I appreciate you guys having me. Hopefully you learned something and you had fun, and I wish you the best of luck rest of the month trading. Good luck. Hope it helped. Dan, thanks for having me.